We saw a massive sell-off in the tech stocks. However, Dan Ives says DeepSeek's AI model is a minimum threat to the AI revolution thesis. That would also mean stocks like Google. Now, before we get into the analysis, let's actually get into this article. It is coming from investing.com. So, Wedbush analyst Dan Ives has dismissed concerns about the impact of DeepSeek's recent AI model on U.S. tech dominance, calling the market sell-off a golden buy-in opportunity. In a note, Ives emphasized that while DeepSeek's language model is impressive, it poses a minimum threat to the broader AI revolution being led by U.S. tech giants. However, it quickly became the top app on Apple App Store. Built using reduced capability chips due to U.S. restrictions, the model has sparked concerns about potential Chinese advances in AI despite chip sanctions. Now, one of the reasons why it became the top app on Apple's App Store is open source versus OpenAI's ChatGPT, which is closed source. Now, despite the buzz, Ives is confident that DeepSeek is no match for the infrastructure and enterprise-focused efforts of U.S. tech giants. Ives also dismissed fears that major companies will rely on DeepSeek or for AI infrastructure, stating the U.S. Global 2000 company is going to use a Chinese startup DeepSeek to launch their AI infrastructure and use cases. That's a good point. He reaffirmed his bullish stance on Nvidia, Microsoft, Google, and other U.S. tech leaders, asserting that DeepSeek's innovation might even accelerate capital expenditure by hyperscalers. All right. So this is the monthly chart, and you have a major resistance support band at about that $150 level. And if you can see up above, you have the making of tweezers, which is not good. These are rejection wicks, which is not good. However, you do have some support at that $190 level. Why? That level once served as all-time highs, should serve as support now. So resistance, breakthrough, although we didn't get a close yet, but it should be support. Scrolling down to the weekly chart, you can see how price has failed to close below the 190 level multiple weeks, and even on the sell-off today, when Google was down 4% or $8, price, although closed at the lows of the day, price did not close below this resistance support band. Going down to the daily chart, if you happen to get a close below, you see this gap here, that is an extended range green candle. So what you have is an extended range green candle. That's a rally in price, one basic candle, and then the rally out. And as you can see, price nearly came and dipped its toes in the upper portion of the zone before moving higher, although price is now consolidating. However, the chart is suggesting you do have levels of support. They are local, meaning on lower time frames. However, I love to see these level on level type structure forming. because typically in this case, if price was to move down, it's going to eat up some of the sellers, because you do have buyers willing to defend this level. So by the time if price comes down to the 185 level, well, you have a bigger imbalance between buyers and sellers, and so you should get a bounce. So I like this setup for a return to that $200 even level. Thanks for watching. Subscribe. Please like the video.